Hello, this is Ryan of Vacation Rental Bookkeeping. This is the second in a series of videos on the income statement for vacation rental owners using Xero. In the first video, we took a look at how to view the income statement and talked a little bit about what it is. In this video, we'd like to drill down and see the individual parts of the income statement, explain them, and talk about some other parts that you might see in your income statement. If you don't have your income statement pulled up yet, go ahead and go to Reports and select Income Statement. Again, for this business, we're going to go to Compare Periods, and I'm going to select March of 2016. You can select whatever time period you would like to view for your business. Right now, we're not going to compare any periods. And once again, I'd like to sort this by account code. And we covered those in the previous video. So let's pull that up by clicking Update. And we'll take a look at the categories here first under the revenue section of the income statement. Remember, this is revenue that was earned, not necessarily received, during this time period, in this case from March 1st to March 31st, 2016. So our first category is rent revenue, and that would be the actual rent that your tenants paid for staying at your property, and these are for bookings that took place during the month of March. Again, we mentioned earlier, because of the accrual method of accounting, these numbers are showing up for March, but you probably were paid for them in other months. You may have even had a customer pay you back in December of 2015, but it's showing up here in the March income statement because that's when the booking actually took place. That's when you actually earned the money. Again, we can drill down by clicking on the amount, and we can see the details for those bookings. One thing you may notice up here, we see this reversal to defer revenue, and you may be saying, what in the world is that? Well, that's something that I put in there as your bookkeeper. And what this was, we had a customer that their stay included days in the end of February and the beginning of March. It spanned 2 months. To make it correct on the income statement, I had to split up the revenue. Part of it belonged on the March statement, part of it belonged on the February statement. And so I made an adjustment here to make sure that that was done properly. So that's something that I would do for you. But if you see something like that on your income statement, and not sure what that is, feel free to let me know. I'll be glad to help you understand that. That's what this one happens to be. Again, we saw in the other video, we can click on any of these and see the details for any of those statements, for any of those bookings that we would like to. Let's go back and look at some of the other categories. Next, we have money that came in from cleaning fees for bookings in March. Money that came in for pet fees. We only had $40. So again, we might say, well, I don't have very many pet fees. Let's check that out. And we see we only had 2 customers that brought pets in the month of March. All right, so we can easily find that out. Now, you may have some other fee. You may charge a linen fee, some other custom fee that you charge. You may have some other way of earning revenue. And what we would do is set up custom accounts here for whatever fits your business. These are the ones that are pretty typical, but you may see other ones here that we have set up because your business has some other kind of fees that you charge. One thing you'll notice, we have security deposit forfeitures. Now, we do not have a category for security deposits. Those are going to show up on the balance sheet, and we'll talk about that in that video. The reason they're not on the income statement is because they're not considered income. Very high possibility that you're going to have to give that security deposit back. It's not income to you, and so we're not going to count that as income. So why do we have this one? All right, well, again, if we're not sure about something, we can always click on it and get more details. And here we will see, all right, Margaret Hutzler, security deposit kept for broken window. Oh yeah, and then you might remember, yeah, I remember she broke that window and we kept 150 of her security deposit. All right, when you keep someone's security deposit, then that does become income, and it has to show up here in the income statement. So that's what that category would be. And then lastly on there, we had less refunds. So refund would be when you agree to give somebody their money back. And again, once again, you can click on that and see, okay, what do we have here? Oh, this was Sam Robertson. All right, so we can see that we refunded him $1,015. And so something must have happened with this guest where they canceled and the owner decided they were going to go ahead and give them their refund. And so actually the rent revenue was included up here in rent revenue. If we click on that once again, we will see here's Sam Robertson, and here's is showing up as income. And since that actually was not income, we gave it back to him. We're going to show that as a negative here, and we're going to deduct that, so that when we add this column up, we'll take away that money that was refunded to him. All right, in the last video we mentioned that cost of sales are always directly tied to the reservations. And here we have two examples. Listing fees, so that would be like when the website that you use to get bookings charges you a percent, and that would be a listing fee. Merchant fees are credit card fees. If you use your own website to get bookings, and the company that processes credit cards for you probably charges you a merchant fee, and that would be listed here. If you have some other things that are directly tied to your bookings, for example, when you pay a cleaning person to clean, this owner in this business cleans themselves, so they don't have that. But if you pay somebody to clean, that's directly related to each booking. It has to happen each time someone stays, and so that would be a direct cost. It might show up in this section. All right, and then again, we will take the total revenue, subtract those costs of sales, and get our gross profit. Then we'll look at our operating expenses, things that are not directly tied to bookings, but things that the business does have to pay in order to operate. And so we have advertising, and we see we didn't have any advertising in the month of March. This column over here is the year-to-date column. So we did have some advertising earlier in 2016, but none here in the month of March. All right, we have the electric bill. And again, we can always click on anything we want to get more details. And we see two electric bills. The reason there are two, this particular owner has two properties that he operates, so one electric bill for each property. Let's go back to the income statement and look at some of the other categories. So here we have property insurance. On the previous video, I explained how that this owner actually paid 6 months of property insurance in January, and then on the accrual method we divide that total up for 6 months because they paid a 6-month insurance premium. So we want to show how much of that insurance premium applies to each month. In this case is $153.34. All right, internet TV expense. Here's another good example of how the accrual method might work. Let's say that the internet and cable bill came on March 20th, but it was not due until April 10th. All right, well, the bill was incurred in March, and it was for a service that was provided in March. Maybe the owner didn't pay it till April 7th. It would still show up on the March income statement, even though it hasn't been paid for yet, because it was incurred in the month of March. All right, we've got janitorial and cleaning expenses. Let's take a look at those and see what we have. All right, so we see we went to Walmart and we bought some cleaning supplies there. If you want to see even more details, we can click on that actual transaction and we can drill down and see as much detail as we want to. We see it was on March 12th, and here's exactly what was purchased. Here's the account. It was for the Morning Glory property. That was the particular cabin that this supplies were purchased for. And then if you have been faithful in submitting your receipts, you can click right up here on the attachments, and you'll actually see the receipt for this transaction is attached to it. And you can zoom in there and actually see the receipt from Walmart. So the details are great. It's all organized. And you can, as the owner, have a real clear view of exactly what income and expenses are going in and out of your business. Let's use the back button and get back to the income statement. All right, we have legal expenses. Didn't have any this month, but we did have some earlier in the year. And you can take a look at the other categories there. Most of them are pretty self-explanatory. Again, the property tax has been what we call accrued It's actually only paid once a year, but it is going to be divided up among the different months. So we can see actually how much property tax would apply to the month of March, even though we didn't pay it in the month of March. And we have the water bill, the website expense. That's another one that was accrued. It was cheaper for this owner to pay for a whole year of a website service all at once rather than pay monthly, and so that's what he did. In January, he paid $216, and that covered the whole year of 2016. But again, so that January's income statement is not out of whack, we don't want to put $216 in January because a lot of that money was for later in the year. So what we do is divide 216 by 12, and it comes out to $18 per month is how that we should split that expense up, so that when we look at each month, we see what the business had to pay for internet on that month, even though the actual cash was dispersed back in January. All right, let's talk about depreciation. Depreciation is how that we show the expense of your properties, especially. When you buy a new house, we don't want to put a line on the income statement for property and show, $250,000 expense on, October of 2015 because we bought a new property. So what we do is depreciate that house slowly, and according to the IRS, they say the useful life of a house is 27.5 years. And so we take the price that you paid for the house and we divide that up monthly for 27.5 years. This particular owner has 2 houses, and so this is the amount of depreciation for their properties. And other things can be depreciated too, equipment, furniture. Generally, things that are going to last more than 1 year are going to be depreciated over time. So this isn't actually money that was paid out in March, but the business used up part of the value of that house during the month of March, and that's why it's showing on the income statement. We mentioned before that other income and expenses are things that are not necessarily tied directly to the operation of the business. Interest income, you get interest from your bank for putting your money in there. You didn't really earn it by conducting business, so we put it down in its own separate section. Interest that you pay on mortgages or loans would go in this section. And we have some little minor adjustments just to keep our books straight. And at the end, of course, we see the net income or loss for the business, and this is $6,244.06. If your business is a corporation, you may see a section of taxes, income taxes that were paid. If you're a sole proprietorship or a partnership, or usually if you're an LLC, your taxes are included in your personal expenses, and they're not actually part of your business, so we won't see that section here. Some other things that you may see on yours that are not on this particular income statement. Again, we mentioned you may have other forms of revenue. If you get money, maybe you have a vending machine on your property, so we might have a category for vending machine revenue. We would customize that for your business. You may see a section for discounts, and those are usually discounts that are given after the initial invoice is processed. Okay, for some reason you decide, I already charged this person $800 for their stay, but I've decided to give them a 10% discount now. All right, well, we would show a line here and it would have a negative, just like refunds, to show that you actually are not going to have that income anymore. All right, under cost of sales, we mentioned if you have a person you pay to clean, we would most likely put that there. Under operating expenses, you might have automobile expenses. If you have to travel to a rental, it's a distance from your house. You may have bookkeeper and accountant fees that you have to pay. Those will be included here. If you rent office space, you might see a section for rent on here. If you pay employees, you'll see a section for salaries and wages. If you pay employees, you'll see a section for payroll taxes that were paid by the business. You know that you have to match their Social Security, for example. That's an expense your business has to pay, so that would be shown in this section. If you pay for software, if your business donate something, a charitable gift, we would see that. If you go to a conference to get training or extra education, we may see that here. Now what we list here most of the time is tax deductible, but there may be something on here that is not tax deductible. That's something you would work out with your tax preparer or CPA. But me as your bookkeeper, I will list everything that you pay out, and your tax preparer and CPA will make sure what would be tax deductible and not tax deductible. All right, that's some great details on the income statement and the details it provides for you. In the next couple of videos, we'll be taking a look at how this can help your business, what it does not show your business, and then we'll also look at how you can customize this report to compare time periods and look at the income statement just for one particular property that you own. And so check out those other videos. If there's anything else I can do to help you, please let me know.